Good morning, friends. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing on for the day, as well as for the next few sessions. Now, post Wednesday's sudden fall, in yesterday's podcast, we had clearly mentioned that while tracking the FII data, there were no negative data points. In fact, on the contrary, FIIs were both buyers in index as well as stock futures, and that's what exactly we saw on the screen yesterday on Thursday on the Nifty's weekly expiry day. Now, while Nifty and Bank Nifty have recovered more than 60% of their Wednesday's fall, a good recovery was visible in the mid cap and the small cap indices too, which covered more than 50% of the lost grounds. Now, friends, there are two ways to approach such a fall. One is from the derivative market angle, and another one is for the cash segment, whether it is large cap, mid cap, or small cap. So, while no signs of short formation were visible in the derivative space with what the FII data at least indicated, and we already shared it yesterday, the fall seemed pretty local in nature due to the overbought conditions, which is now nullified to a great extent. Hence, we need to track this FII data on a day-to-day basis to check whether there is any deviation from their current stance or not. Secondly, coming to the cash segment, post this fall, we would see the leadership of the sectors change, and the same old sectors which have moved too much in the last 6 months might be a bit slow, and they might not take the lead in the rebound move. So there could be some change in sectors, and we would be keeping you informed time to time. But this surely has acted as a wake up call for those who were overconfidently betting on the small caps and mid caps, the lesser known names there, and trying to make quick money in over leveraged positions. So just it has acted as a wake up call at the right time. So we reiterate that it would be extremely important to remain stock specific in structurally good stocks where there is decent fundamentals in place, and rather than chasing the small caps or mid caps which have risen multifold in the last few months. Coming to the dollar index and the US 10-year bond yields, both now, while the dollar index has further weakened up to 102 levels, and even the US 10-year bond yields are trading comfortably lower than 3.9%. It's just the Brent crude oil prices that are experiencing volatility and trading all over the places between $74 and $81 a barrel on account of supply constraints due to the security reasons arising while shipping via the Red Sea route. So I feel once this geopolitical concern dies down, even the crude prices would once again head lower, and the only concern would arise if these oil prices cross $83-85 a barrel. So until that happens, India is still in a sweeter spot. Coming to the US markets now, especially S&P 500 is in a strong uptrend after an uninterrupted move in the past 3 weeks from 4550 to 4750, trading somewhere closer to the higher end of the range. And although some consolidation could be witnessed, we feel that the uptrend could continue up to 4830, 4850 with 4700 or 4650 as a intermediate support. Over the last few trading sessions, if you see India VIX now, coming to this is a very important part now. Over the last few sessions, India VIX has signaled a cautious approach at higher levels in Nifty. Steadily, we have seen volatility index rising from 12 and a half to 14 and a half, and we feel till the time it stays about 12.5, although the data does not show anything, we need to be still a bit cautious and extra vigilant over leveraged positions. So it's not a sell call, but for sure we should be cautious and vigilant on over leveraged positions. Nifty levels, if we speak about that, 21,150 or 21,200 zone would now act as an important support band, and until this zone of 21,150 holds, the upside could continue up to 21,380, 21,420 levels. Below 21,150, index could retest the lower zones of 21,020, 20,980 zone, which were retested yesterday. If 21,400, 21,430 levels are crossed, fresh life highs up to 21,580, 21,600 would be on the cards. We feel that positionally Nifty could hold out 20,800, 20,900 band where the 20-day exponential moving average is placed, and this is from a medium term perspective. Coming to the open interest data, significant call writing built up is visible in 21,500 as well as 21,600 strike prices from the monthly expiry perspective, while on the puts end, 21,200 as well as 21,000 strike prices are holding considerable open interest positions, and they've witnessed additions yesterday as well. So overall range for the day would be 21,130 on the downside and 21,400 on the upside. But the broader range continues to be 21,000 on the downside and 21,500 on the upside. Coming to the bank nifty levels, now the zone of 47,500, 47,600 is likely to act as a strong support. And friends, what a move it was in bank nifty, 1,000 points, more than 1,000 points from the lows of the day. And remember, yesterday itself, we said on this podcast as well as while we were sharing our weekly expiry analysis during the course of the day, that it would be the banking index, it would be the financials that could outperform, because while mid caps, small caps were falling on Wednesday, bank nifty or the banking or the financial stocks were not falling in the same speed. So we feel that this index could outperform, and 47,500 now acts as an important support till this holds. Upside up to 48,150, 48,200 could be witnessed. Above 48,200, this momentum could carry forward or strengthen up to 48,500 levels. On the downside now, in the event of this 47,500 being breached from an intraday perspective, the next support zones are placed around 47,200. But see, from an intraday perspective, we shared 47,500, 600 as an important support. But positionally, if you see like in Nifty, 20,900, 800 is an important support. From a bank nifty perspective, 46,800, 46,900 zone where the 20-day exponential moving average is placed continues to be the all important support from a positional perspective. Now, if we see the open interest data, significant open interest buildup is visible in 48,000, 47,900 and 47,500 puts, while 48,000 calls are having the highest open interest, which implies a near-term trading range of 47,500 on the downside and 48,200 on the upside for the bank nifty. Now coming to the stocks and sectors in momentum, along with Reliance outperforming yesterday, we saw Reliance in the last 2-3 days have witnessed a good breakout, and yesterday we have seen Reliance covering most of the losses that it had incurred on Wednesday. So that is a sign of a outperforming stock. With a small move or rebound in Nifty, the stock has recovered almost complete of what it had lost on Wednesday. So along with this stock Reliance outperforming, we feel that banks could outperform the broader markets, especially stocks like HDFC Bank, IndusInd Bank and AU Bank. And we feel that the momentum could remain strong in this segment for the next few days. Select pharma stocks. Yesterday, a lot of pharma stocks were demonstrating a lot of strength, and we feel the chart structures of Oro Pharma, Torrent Pharma are well placed on the daily, weekly, and the monthly time frame, and they still look strong from the current levels. From the broader market perspective, selectively we are bullish on stocks such as BPCL, Bank of Baroda, Power Grid, Britannia, Voltas, Dixon. Hindustan Copper has completely recovered its losses and even gained more than the last 2 days move. Now, laboratory shares such as Lalpath Labs, Metropolis, Thyrocare, they look good. IRB Infra, Cochin Shipyard, Cyient, MCX, NMDC, few mid caps such as Shyam Metallics, Zensar Tech, BEML, railway stocks such as IRFC, Chemplast, VMart. So we are selectively bullish on all these names where the structures are very good despite the fall in the mid cap index and the overall broader markets. Now coming to the FII DII synopsis, in the cash segment yesterday we saw FII selling to the tune of 1600 crores while DII is buying to the tune of 1400 crores. Now FII's long short ratio for index futures has further improved to 66.6% as they have again bought 4300 index future long contracts. On the stock futures front, FIIs have sold closer to 29,600 contracts While on the options front, FIIs have sold roughly 24,000 call option contracts, and they've even sold 55,000 put option contracts. Remember, friends, yesterday morning also we had hinted towards this, that FIIs have sold both index option calls and index option puts, and that means that they are not expecting a bigger volatility to happen more than what has happened on Wednesday. So selling calls and puts always means that FIIs are expecting volatility to die down, and this is a natural phenomenon. When the volatility index is high, one could try to capitalize it by selling calls and puts. So, friends, that's all for today. Thank you for regularly listening to our podcast, and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights in our weekly podcast. So, thank you all once again.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.